Hi, and welcome to ECCB Connects, a production of the Eastern Caribbean Central Bank to share with you who we are, what we do, and how we serve you. This week, we discuss credit reporting in the Eastern Caribbean Currency Union. Van Reynders, CEO of EveryData ECCU Limited, discusses how credit reporting helps to increase your access to credit and promotes financial inclusion. We'll share more with you after the break.
Season 23 of ECCB Connects is coming to an end. The final episode airs on 29th November. We hope that you have enjoyed viewing our programs as much as we have enjoyed bringing them to you. ECCB Connects will resume in the new year with more exciting and informative episodes to share with you who we are, what we do, and how we serve you. Until then, we wish you a wonderful holiday season and invite you to stay connected with us on our social media platforms.
Thanks for staying connected. Credit reporting is the process through which a licensed credit bureau collects information from borrowers about how you pay your loans and bills. This data is then collated to form a report with your credit history. The ECCB has issued a license to EveryData ECCU Limited to carry out this work in the ECCU. According to the CEO of EveryData ECCU Limited, Van Reynders, the Credit Bureau helps to remove the silos that presently exist in the system of information sharing among lenders in the ECCU. He says the Credit Bureau is an effective method of sharing credit and credit-related information between institutions. Van Reynders was at the time speaking at the ECCB's 5th annual conference with licensed financial institutions, held 9th to the 10th November 2023 at the ECCB headquarters.
The EveryData Group has operations that span across the Caribbean region. Our technical hub and regional, head office is based in Jamaica, where we run a very successful credit bureau there. We also have very successful credit bureaus in Guyana and Barbados, respectively. And now, of course, is the latest newcomer to the industry, which is to the group, which is the ECCU operations. And that spans, we're licensed by the central bank to operate across the 8 member states of the ECCU. So EveryData has evolved beyond the borders of the traditional credit bureau, right? We are leveraging on the latest technologies, different databases, different data sets to create or to position ourselves as an industry leader in a total credit risk management solutions company. So we create value-added products to support financial institutions to streamline and to make more affordable the credit granting process, ranging from digital KYC products to support value-added products to support the value, the acquisition and the onboarding of data of borrowers through to the customer life cycle, and also on the collection side, we have value-added products to help collections, reduce the cost of collections, improve collection ratios, etc. Overall, improving the efficiency of financial institutions. Furthermore, what makes EveryData different is that we recognize the importance and our obligation to empower consumers, and we talk about financial inclusion, right? And this is what we aim to do, is to put the power of reputational collateral in the hands of the consumers, the data subjects, the owners of that data. And we intend to do this through an application called My EveryData. It is an application where consumers have access to their credit report. It's an authenticated, secure application where they can have unlimited access to their credit profile. They can check their credit score. It's an interactive application, so they can dispute or query information that they feel is incorrect. And also we can push content through this application, educational programs, right? And so we feel that this application is necessary to empower consumers, and this is what makes us different. We feel that financial inclusion is a team sport, right? The key dimensions of financial inclusion, again, I won't replicate what was said before, but we'll talk about products and services. That's a fundamental, there needs to be payment systems, accounts, savings account, check accounts, overdrafts, etc. Insurance products needs to be there, life insurance, credit life insurance, and then, of course, a plethora of credit products. These products must be personal loans, overdrafts, mortgages, SME loans, very important. And then these features of these products must be affordable, available, convenient, and must be of good quality. There must be multiple access points. That could be branch level, online banking, mobile banking, etc. There needs to be proper infrastructure and a range of institutions. As was said earlier, you know, the range of institutions go from commercial banks, credit unions, non-financial institutions, all the way down to microfinance and digital lenders. And they serve different areas of the hierarchy, or should I say the social economic hierarchy, right? So it's important that there's a range of institutions. And then to promote this financial inclusion, this holistic approach, is that if we don't have information sharing between them, what happens is that they end up just being silos, and it's difficult for consumers to traverse between them because of this asymmetric information between these institutions. And so this is where the Credit Bureau comes in, is just to round off this hierarchy, or this key dimensions of financial inclusion, is that a Credit Bureau and is an effective method of sharing credit and credit-related information between these institutions. The current situation is that there's asymmetric information that creates barriers to affordable credit and efficient credit in the ECCU. The current situation, when a borrower applies for a lender, that lender has an issue or a challenge of asymmetric information, meaning they struggle to issue or to assess KYC, affordable assessment. How do you calculate affordability? What is the extent of the exposure of this particular member or borrower? And then also, what is the credit risk? What are their propensity to honor their obligations? Where do they have exposure? You know, and what is the history of this borrower? And so, because of this, what's happening at the moment is institutions are they go through this manual process of sending out emails and sending letters, and the information that comes back. First of all, the cost of credit is astronomical. It's time consuming, and then the information that comes back is patchy. You know, there are gaps in the assessment, and that makes it very risky for institutions to issue credit, particularly with the lower levels. Say, for instance, someone that has a thin file, very little credit information is available, or the information that they get back is not adequate. So what do? Do you decline the credit, or do you flip a coin? You know, 50-50, maybe we'll get our money back. And so really the challenges that they face in this is that there are adverse effects, which of course, as you know, is a high risk of lending, high cost of credit, there's lengthy application approval periods, demand for high collaterals, etc., high blanket interest rates, which is a big one. And really, the main cause of this is that the lender cannot accurately price in the risk when they do that assessment, or because of this asymmetric information. This creates high NPLs, causes institutions to restrict their portfolio, right? Because you want to keep your NPLs down, but you want to increase your portfolio. So if you keep your NPLs too down, you also restrict the growth of the portfolio. And this obviously also creates an over-indebtedness and reckless lending, because we're not able to see the extent of the exposure, but also not able to report on the extent of the exposure as well. What will happen with the Credit Bureau here is that the Credit Bureau collects, maintains, and protects credit-related information and non-financial information as well from multiple institutions, banks, credit unions, so those are the traditional lenders as well as non-financial institutions, collates that information into a consolidated credit profile, and we make that back available to financial institutions at the time of assessment, so that institutions can make an informed, accurate assessment on whether they wish to grant credit, yes or no, as well as the terms of that agreement as well. For an example, the borrower with extremely good credit shouldn't necessarily be paying the high interest rates that someone that is an habitual defaulter, right? Because now you can assess the risk and start incorporating risk-based lending, reduce interest rate, better terms, maybe increase your loan amount, offer different products, you know, so it really opens the door. It removes all of those barriers that we spoke about earlier. And again, just very briefly, I want to touch on some of the benefits here to the consumers, because that's really why we are here, financial inclusion and access to credit, is that removing these barriers of access to information makes access to affordable credit easier. So borrowers with good credit scores are far more likely to get approved for products. There's reduced asymmetry and KYC, improved loan terms. Borrowers with good reputations can use that reputational collateral to have access to a range of products, ask for reduced interest rates, get better loan terms, larger loan amounts because you're always can also assess the affordability. And then faster loan approvals and better products. With using the credit bureau, lenders are able to produce better or create better products, make it more affordable, make it more accessible. Because of also there's a significant reduction in the cost of credit for institutions as well. Very importantly, also I want to mention that the credit bureau and the credit report means that borrowers will get assessed fairly based on facts, no discrimination or bias reviews. And this is a complaint I hear regularly in the market here, is that assessments are biased or it's non-factual, there's discrimination, things like that. So with credit scoring and the reporting, we remove that element of discrimination or biased reviews. The Credit Bureau also helps to protect consumers in terms of identity theft, right? So the Credit Bureau will monitor the profile. Consumers can also monitor their own credit profile and see if there is any credit that's reported on their name that is not up to them, they can dispute it. And we've proven that in African markets that there is fraud syndicates that make themselves guilty of identity theft and borrowing on other borrowers' profiles.
Hi, I am Tiki, the owner of Tiki Gab Fresh Fruits and Vegetables, located on Ponds Pasture. And you are watching ECCB Connects.
Celebrating ECCB at 40.
Did you know that the following institutions were established through the work of the ECCB? The Eastern Caribbean Home Mortgage Bank, the Eastern Caribbean Securities Exchange, the Eastern Caribbean Securities Regulatory Commission, the Eastern Caribbean Asset Management Corporation, and the Eastern Caribbean Partial Credit Guarantee Corporation? Now you know, celebrating ECCB at 40.
This is where we end this week's episode of ECCB Connects, where we heard from Van Reynders, CEO of EveryData ECCU Limited, the entity licensed by the ECCB to carry out credit bureau operations in the ECCU. He shared that sharing of information between lenders has been proven to make access to credit easier for consumers. He also explained that credit reporting promotes financial inclusion and empowers consumers by arming them with reputational collateral. Check out the full discussion on our social media page at ECCB Connects. Thanks for watching, and see you next week for another episode of ECCB Connects.